Morning traders, hope you guys are having a great morning so far. As promised in yesterday's video, what I'm going to be doing is going over some of the trades I'm going to be watching that I got from my scanner. I'm going to go over the swing plays, I'm going to go over the economic calendar, and also the gap fill tickers I'm looking for and the reason why they're up and how exactly I'm going to play it. So without further ado, let's get into it. So, the reason I bought McDonald's, as if you guys watch my previous videos know, over the last 15 years of McDonald's, or at least, yeah, I would say over the last 15 years, besides the COVID crash, McDonald's has respected the 200 EMA and the SMA. I bought it right down here at 249.52. Not a bad buy at all, and it's continuing to rally upwards. Now, the big levels I'm going to be watching is going to be 281 support, 285 resistance. I'm expecting it to kind of stay within this range for now. I'd be very shocked if this week we break upwards of 285. It's possible because we are mounting the 200 EMA and SMA, which is very big. That's a very bullish factor on McDonald's. Then on Coca-Cola, I'm going to be watching this daily resistance zone right here. It's right near the 200 EMA and the SMA on the daily, so I'm expecting to get some resistance up in this area. I would not be shocked if we get a little bit of a pushback, maybe a retracement back down to 57.57 where the previous higher high was. Now, in terms of why I bought this, it was because of the weekly. I ended up buying Coca-Cola stock right here. I liked how we mounted the 200 EMA SMA. Now, I did move up my stop loss from, I believe I had it down at like 55.50, and I moved it back up to 56.28. As it goes more in my favor, I'm moving it up more and more. Now, if we end up breaking down this resistance zone on Coca-Cola, what I'm going to do most likely is set my stop loss to break even. And I might even consider opening some cover calls on Coca-Cola. I have to look more into the risks of that before I start doing that, but it's just something that I'm considering. And then the other swing play that I'm looking at and I'm currently involved in is Walmart. And the reason why I bought Walmart was based on the daily chart. What I really liked is, you have to keep in mind, so they beat earnings, but they gave negative guidance on consumer strength. So the way that I take it is it's just a massive overreaction and the sellers just dumped it. So personally, I think it's a $170 per share company selling at, let's see, where are we at now? 156. I think it's a great buy. As you can see over the last few months, we've really respected the 200 EMA and the SMA. And you also have to keep in mind, within the sector, Walmart is definitely one of the stronger names. So, I mean, in my opinion, it's a very low risk opportunity. If it works out, great. If it doesn't, it is what it is. Now, I plan on moving to my stop loss. The more it goes in my favor, I'm going to move up my stop loss probably up to 154, depending on how price trades this week. But if we end up pushing upwards of 156.89 to 157, then I'll definitely move up my stop to at least a 200 SMA. I still want to give the trade a little bit room to breathe for now. But in terms of gap fill trades, what I'm going to be watching today is going to be this level on Shopify. As you can see here on the close on Friday, we closed at 70.35. And you can see pre-market that we're up to 73.45. The reason why Shopify is up in the pre-market is due to the fact that they reported good sales data, something down the lines of that, where they expect good sales data. So I'm expecting, I mean, in my opinion, I think that there's a difference between expecting and actually getting good sales data. So I would not be shocked if come market open that it pushes back down to 70.35. I'll be looking for 71 calls. I think that will be a very nice play if I can get into that. Now on, what was the other name that I was looking at? CCI. So the big thing on CCI was that an activist investor group, Elliott Investment Management, which is a very large shareholder, wanted to shake up management in the company. They want the overall price of the company to rise. And so they're just making some changes to the management of the company. And so basically what they are is they're just a they're a big hedge fund that has majority ownership inside of CCI. So that being said, that's what's driving up the share price, at least in the pre-market. So what I'm going to be looking for is maybe not today, but the next coming days. I would not be shocked if we make a move back down to 103.58 where we closed on Friday. That's what I'm looking for in CCI. And then in terms of last but not least, I'm going to be looking at AU for a nice gap fill trade. And these are just the tickers, like small cap tickers. I'm going to go over the big S&P and the NASDAQ tickers I'm looking at for gap fill trades as well in a second. So I'd watch 1723 on AU. Now, I wasn't able to find anything great on AU why it's up. It could just be that buyers are in control, possibly. Maybe there's something that I'm missing. If there is, please leave a comment. I would greatly appreciate it. But as far as I can see it, I think that we're going to make a move right back down to 1723. I think that's very possible. Be a nice gap fill. Maybe get a nice scalp over to the 200 EMA and the SMA. Now, what I'm going to do is I'm going to turn off that EMA and SMA, and we're going to go over to SPY. So what I'm going to be watching on SPY for gap fills is 455.30, 453.27. Those are going to be two big levels. So I'm going to be watching for those gap fills on Tesla. I'm going to be watching 235.45 for the gap fill trade. I think that's very possible. Then was there any others? No, I think that was it. But if you guys appreciate this content, please like, subscribe, comment. It will be greatly appreciated.